Urban environments are characterized by a high concentration of economic activity. Daily activities within a city are deeply intertwined with financial transactions. Money serves as the medium for most exchanges, from basic needs to complex services. The cityscape itself reflects the financial infrastructure that supports urban life. Financial institutions, markets, and businesses are integral components of the urban landscape. The flow of money symbolizes the constant economic interactions within a city. Financial literacy is the capability to comprehend and manage personal finances effectively. This encompasses a range of skills necessary for sound financial decision-making. Key skills include creating and maintaining a budget to track income and expenses. Saving money regularly is another critical component of financial literacy. Understanding investment options and strategies is also essential. Financial literacy also involves understanding various financial products and services. The scene presents a comparative view of financial literacy versus illiteracy. A financially literate person is depicted making wise savings and investments. Animations illustrate the strategies employed by the financially literate individual. Conversely, a financially illiterate person is shown struggling with debt. This contrast highlights the impact of financial knowledge on economic well-being. Financial illiteracy increases the likelihood of accumulating debt. It also elevates the risk of experiencing financial stress and anxiety. Lack of financial knowledge hinders opportunities for wealth creation and investment. These factors contribute to long-term financial instability. Financial instability can significantly reduce an individual's overall quality of life. Addressing financial illiteracy is crucial for improving economic well-being. Financial literacy enables individuals to plan effectively for their future. It promotes effective saving habits, crucial for long-term financial security. Wise investment strategies are a direct result of financial literacy. Achieving financial freedom is a key benefit of being financially literate. Informed financial decisions enhance overall financial well-being and security. Income encompasses all monetary earnings received by an individual or entity. These earnings can originate from various sources, including employment wages. Investment returns, such as dividends or interest, also constitute income. Other potential income sources include business profits and rental revenue. A clear understanding of income is crucial for effective personal finance management. Expenses represent the financial costs associated with acquiring goods. Expenses also include the costs associated with utilizing services. Effective tracking of expenses is essential for maintaining a budget. Managing expenses is crucial for controlling overall spending. Careful expense management contributes to financial stability. Savings is defined as the portion of income that is not spent. Saving money is essential for building a financial safety net. Savings can be used to cover unexpected expenses. Savings are also crucial for funding future goals and investments. Investments involve allocating capital to assets. The goal of investing is to generate income or profit. Understanding various investment options is crucial. Assessing risk is essential for successful wealth growth. In finance, risk is defined as the uncertainty of financial outcomes. This uncertainty implies the potential for both gains and losses. Risk assessment involves evaluating the likelihood and magnitude of potential financial losses. Risk management encompasses strategies to mitigate or avoid these potential losses. Effective risk assessment and management are crucial for making informed financial decisions. Understanding risk enables individuals and organizations to optimize their financial strategies.